So a little bit about what we're going to talk about in the next 20 minutes. We're going to talk about the Austin market. That's what I get asked the most frequently. And then different types of real estate investing. So let's talk about the Austin market. As jobs go, so goes housing. If you have a city with low unemployment and a beefy job market and city with its growing, you have a vibrant housing market. Austin was named one of America's recession-proof cities by Forbes magazine. There were 10 cities listed in all, and overall, it's been fairly insulated from the financial crisis that a lot of the United States has seen. They estimate 1,000 people a day are moving to Texas, and over 90 people a day are moving to Austin in the Round Rock area. So let's talk about why people are coming here. Great place to live, great place to work, and it's a good investment. The entertainment, the live music capital of the world, restaurants, museums, art districts, the university, you have the government and the capital here. Great place to work. Over half the jobs created in the U.S. were from Texas 2 years ago. So pretty impressive numbers. And then great investment. Relatively speaking, compared to other states and other parts of the U.S., we have a low cost of living. Forbes magazine named Austin the best place to buy a home, and it also leads the Forbes list as best bang for your buck. These are some interesting statistics of the real estate market. So this graph here shows units closed to year to date, and the red line, the top here is this year, obviously, with the last 4 years below. A couple things I think are interesting about this. First of all, we're in a really good real estate market. It's definitely improving and better than it has been over the last 4 years. But what I also think is interesting is real estate's a bell curve. You know, when you're looking at investing in real estate and the best time to invest, people often ask that question. The peak season's the summer, so that's probably not the best time to get the best deal. It's usually when you have high inventory and also higher prices. But in the months of January, February, November, December, that's the best time to purchase good deals because you have less buyers looking, supply and demand, and you typically have prices dropping at that time as well. These are some numbers from the Austin market from June of 2011 compared to June of 2012. The new listings are up over 4%. A pending listing is a contract that is a property that's under contract but it hasn't closed yet, and the pendings are up over 16%. The sold properties are up almost 15%. So the prices are up as well. The new listings are up 8%, almost 9%, and the sold average price is up over 4% as well, up to $280. So this is all great news. However, in the next slide, you'll see something else interesting going on in the Austin market. All the sales data is up, but the inventory is down. A year ago today, there were almost 12,000 homes on the market. Today, there's under 9,000. So what this tells me is if you're thinking about selling, it's a great time to sell your property because there's not a lot of homes on the market and not a lot of competition. In summary, though, I think that it's important to look at markets individually and not as a whole. A lot of times if you watch the national news, you hear the doom and gloom about real estate. However, you can't judge the real estate market based on national averages in the same way you wouldn't look at the national temperature to assume what the temperature in Austin is going to be today. So what we're going to focus on is just look at rentals and holding. In the Austin market today, this is working really well. So we're going to talk about holding properties and purchasing homes as a rental home. Advantages of it is that someone else is paying your mortgage. You have the opportunity to build equity and leverage the equity to buy other properties. You have a continual stream of passive income, and depending on how you sell it, possible tax-free gain. And the really great thing and why it's working so well in Austin right now is the rental market is 98% occupied across the city. Disadvantages of it, maintenance can be costly. You can't have moderate cash flow because you do have higher prices in some areas of Austin. Landlording can be a bummer. Getting the calls at 10 o'clock on a Friday night that the AC is not working. That's not a fun call to have. You can manage it yourself or hire a manager. Typically, to hire a manager, you're looking at 8 to 15% of 1 month's rent to hire a property manager to do it for you. And then the vacancy. Like I said, it's really low in Austin right now, but you do have that risk with rental properties as well. So you're not going to get rich, obviously, with this. on a monthly basis. And this is something else, back to your question, is timing, that I always talk to clients about up front. What is your goal? Is your goal cash flow or appreciation? And that also depends on where we look for homes and the type of properties that we look for. So cash flow at the end of the year is, just under $1,400. Average appreciation since the 60s is 6.8%. Austin's been higher than that in years and a little lower than that in years, but I'm running numbers with an appreciation of a 5%. It's about $8,000. This doesn't include depreciation or the tax advantages. It also doesn't take into account maintenance or vacancy. One of the great things about owning rental property is the tax advantages. Almost everything is deductible for rental homes, from interest to insurance, taxes, maintenance.
Depreciation as well.
Yes, yep, exactly. So there's lots of tax benefits here as well that these numbers don't even take into account.